Here's a quick look at U.S. futures. They have turned positive. There is likely U.S. economic data in the mix as well. We're focused, however, on the Canadian economic data, and that is the subject of our conversation with Ted Mallett. Ted is Director of Economic Forecasting for the Conference Board of Canada. Let's please get a graph up of the Canadian dollar as we begin our conversation with Ted. Ted, first of all, thank you very much for joining us. Ted is Director of Economic Forecasting for the Conference Board of Canada. There's the Canadian dollar moving, not a whole lot of movement. It's in positive territory. It has lost some of its gain. On these numbers, Ted, the numbers are significantly weaker than expected. Quarterly gross domestic product growth in Canada comes in at 1.7% in the first quarter. 2.2% was expected by economists, and I saw some economists predicting higher numbers than that. What is your response, Ted, to these figures?
Well, in fact, we were on the low side of the expectations based on our March forecast, based on the when fourth quarter numbers came out. We really only expected 1% growth in the quarter as opposed to 1.7. So we felt the storyline is more important here than the actual numbers. I mean, the business sector is extremely weak. It's been moving backwards for the past 2 years. The consumer sector is not in good shape either. They've used up most of their post-pandemic savings, and certainly higher prices. Concern about renewing mortgages and so on are weighing on that, and the export sector hasn't really been performing that well. So, you know, when you structure not just one quarter, but when you look at, say, the fourth quarter and possibly how it bleeds into the second quarter of this year, we don't see much strength at all. So really, we're not that surprised that the story is laying out the way it is.
I'm looking at the overnight index swaps market. Just earlier this morning, that market was expressing a 64% chance of a rate cut next week from the Bank of Canada. It's now at nearly 82%. So that market is becoming more confident that the Bank of Canada will cut rates next week. What do you think the bank will do next week?
That's our expectation as well. In fact, we've held to that view really since last September. We resisted the call to maybe expect rates to increase in October, November, and then we also resisted the idea that rates would start falling very quickly through December and April. So you know, June was our sort of baseline expectation for most of the past year, and so the real question now is where is the U.S. Fed going on this? How fast will that rate cuts will the rate cuts be? Because I mean, even the 25% rate point decline means that these rates are still in restrictive territory, so they still will have a slowing effect on economic performance, and so we don't feel that the inflation story, at least in Canada, is likely to be reignited.
Speaking of speaking of the economy slowing and inflation, based on what you've seen of these numbers and some of the underlying ones, if we're hanging around zero or low growth, does it feel at this point in time like we're kind of going back to where we might bounce around zero for a few quarters, or does it feel like we've reached the tipping point for a recession? Is that too early?
I think we've passed the idea that we're into a significant idea of recession. When you're talking about a small negative number or a small positive number, revisions could, you know, create recessions in the past, or actually reverse or eliminate recessions based on new numbers that come out with revisions. So we don't pay a whole lot of attention to the R word itself. What we're saying is that the economy is in very slow growth. Our view of the first 3 quarters of 2024 is only marginally stronger than the last 3 quarters of 2023. And really what we're hoping for is that something can reignite, hopefully on the business investment side. Maybe reignite is a strong word, but at least if we can start seeing some recovery in the final part of the year, that will be the positive elements that we're looking for. But right now, we're just bouncing around in very slow growth territory.
And I just want to circle back to something I said when these numbers had just hit the screen. StatsCan has indeed revised fourth quarter gross domestic product growth to only 0.1%. The earlier report reported number was 1.0%. StatsCan has now revised almost all of that away, saying that in the fourth quarter, GDP growth was only 0.1%. And something that we have not mentioned yet, the StatsCan has provided a so-called flash estimate for April. That's a preliminary estimate, very much subject to revision, saying that April GDP rose by 0.3%. What are your thoughts on both of those things, Ted? The dramatic revision down on fourth quarter GDP and the modest GDP growth that StatsCan sees in April.
Well, those actual, if they're annualized numbers in terms of the revisions, those aren't terribly significant. We've seen much bigger revisions. If you recall, 2 years ago at this time, we had a major revision downward in economic growth of that. Monthly numbers will bounce around, and with slow growth in February and March, I'm not surprised that we're seeing a 0.3% increase in April. That translates to an annualized rate above 3%. So those are clearly not kind of setting the trend for the future. So again, we're into a series where numbers will bounce around a little bit. The bigger story is that, if you look at employment levels, the private sector has really been flat for the past year. Unemployment rates are creeping upward. It is a lagging indicator, and employment rates, so the proportion of the population who is employed is going down slightly. So those are symptoms of a weak economy. We don't see a significant stimulus forward, apart from some gradual reductions in interest rates on this. So yes, these numbers will happen, and we could end up with the first quarter numbers being revised either up or down depending on how things go, because StatCan does get new data specifically around, say, inventories, around imports and exports that tend to revise some of these sort of things. So we will take a closer look at the fourth quarter numbers and see what actually caused those big revisions, and that'll help sort of lay the story out for the future.
So you were mentioning, speaking about employment, and we have Canadian job numbers coming out a week from today. And last month, Canada put up a pretty big print. And so I was wondering, what does this have any impact on what you're expecting for next week's job numbers or the wage inflation numbers? And
we need a fairly brief answer here, Ted. We're running out of time.
Okay. Employment has been stoic, I guess, in this past little while, which has actually helped the economy move forward. They've absorbed a lot of the new Canadians, non-permanent residents and so on, into the economy. So that's not necessarily a negative, but it's not a huge positive either for us.